I thought this was only on TV.
No, this is real.
So are you saying that if someone charges a percentage, first question, is that illegal?
Fraud,
Is there
not a
anything-
legitimate return.
Not a legitimate return. So
No, people want money, and the thing is that especially minorities, we love that fast money.
That's great, but usually if you're doing that, it's because you're doing something not correct, illegal, or whatever.
It's a red flag.
It's a red flag.
It's a red
Everyone
flag.
uses debit cards. Everybody either Venmos or Cash Apps or Zells people. And so I'll get a lot of bank statements that say Venmo.
with no details.
No details.
The
So
tax
if
laws
we're-
change every year. You know, the standard deduction last year was 13,600, and now it's like 14,700. We've got to feel more comfortable paying taxes. It's just not about avoiding taxes. And the other thing too,
Make it make sense. Make it make sense. Are we talking about the sense or the sense? Which one are we talking about?
and stuff like that for returns.
So are you saying that if someone charges a percentage, first question, is that illegal? Is there anything actually wrong with it, just at the essence of it, besides the fact that now, I had to spill over into it, right? Because I guess what I'm saying, what I thought about when you said it, I'm charging you a percentage, I'm going to get you the max return, so I'm scamming the system so I can make more money,
Correct.
knowing that this is basically fraud.
Not a legitimate return.
Not a legitimate return. So is anyone that is charging a percentage, that's already just a good sign that they're not legit?
If I went into an office and they said that, I would walk away, because again, that right there is telling me that they're gonna do the best they can do to try to get you the best return. So in my head, if you're saying, give me the best return possible, that's great. But usually if you're doing that, it's because you're doing something not correct, illegal, or whatever.
It's a red flag.
It's a red flag.
It's a red flag.
Dead giveaway. So, Amy, you're on the bookkeeping side of things. Like, what are the basic write-offs that everyone should be considering writing off versus those extravagant ones that most people should not be looking to write off?
That is a great question. And that's how we should all, as business owners, start looking at our expenses. Whenever we swipe our debit cards or our credit cards, and you should not commingle your expenses, your bank account. You should have a business bank account and a personal checking account. I'm sure that web is very hard to detangle as an accountant. And when you're trying to say, oh, well, but I paid for that. Well, was it in your business account or was it in your checking account? We can get it back over. It's fixable, but it's easier, it's cleaner if it's with your business checking account. So the basic ones are office supplies, software, marketing. Is a great one because you're going to help with like all the social media, Facebook, Instagram, LinkedIn, all that good stuff. What's another good one? Self promo here. I have a business deduction checklist that you can get off my website for free if you need it, but it helps you identify all of these because there's just a myriad of things you can go through. Meals. And the other thing too with keeping a resource as a tax advisor as a resource is the tax laws change every year. You know, the standard deduction last year was 13,600 and now it's like 14,700. So one of my biggest tips is I love giving business owners is make your friends and family part of your board. Because then when you go out to meals, you're actually having a board meeting. You're talking about when Eric and I talk, if we go to lunch, we can write that off as meals.
Business meeting.
Yes.
So slow it down. Hold on. Because now you're starting to sound like how I want you to sound. Because I want to write everything off, right? No, but the reason I'm asking you to slow it down, earlier you said your friends and family can be some of the hardest people to work with, and now you're saying make them your board member. So kind of marry those two ideas together. Like, how does this really work in essence? Do you really want to do this, or do you need to put a little bit more thought behind it?
So I love Tyler Perry's example. He said, as you rise, and it's like a rocket ship, the boosters will fall off. you'll know the people that are falling off.
Yeah.
You're not going to be able to take everybody with you. But if you consider them an advisor to your business, if you are reaching out to them in regards to tax advice or strategic planning, whatever, they should be part of your board. They should either be a contractor or something to give you sound financial advice on how to progress, on how to succeed. So that could be a friend or family member. But the more you link them as a business consultant to your business, the more that you can write off the expenses.
Does this mean you need to be paying them?
It's
to be on your
cleaner.
board?
It's cleaner because then the IRS can say, okay, oh yeah, Eric did get Amy got a strategy session with Eric on some tax advice. So that is a legitimate business partner. So you're making it very clean. There's that touch point that they can go back and audit if needed.
Okay. You were gonna say something, Eric?
No, I'm just
okay. Well, let me ask you then, because when it comes to these write-offs, what kind of specific rules should each of us tend to follow around meals, entertainment, things like that? Because she just mentioned have a board meeting as a lunch. Do you feel the same way?
The same way. Mainly the things that I usually tell people is, like she said, if I'm meeting with a client, if I'm meeting with my board, those are the type of things you can write off. One of the things that a lot of people write off is, which kind of goes back to the commingling, like she said. So I'll see
not commingle.
I'll see people's bank statements, and they'll say, okay, I went to HEB, or like we were talking a second ago, we went to Fleming's, or we went here, because me and my wife went out to Fleming's last night, or we went to Perry's and things like that, and we're using our business cards to do it. Or I'll see where you went out of town. I've even seen people use Ticketmaster, so they've gone to games and all kinds of stuff like that. We're laughing because these are things that I do. I do these things, but I don't write them off. I don't write them off for my business because they're not business related.
So you and your wife went to Fleming's.
Correct.
You had a few moments, maybe 30 seconds of conversation about business.
But my wife
Let me tell you what happened at work today.
My wife's not in my business.
Okay, let's say she was. Okay, let's use me as an example, because me and my wife do run our business together.
Yeah.
You guys are business partners.
Should I write every one of those meals off? Because we talking about it all day, every day. We don't miss a moment. But would you advise that I write all of those meals off?
So I have been in an audit or two with other clients.
Okay.
And one of the things she really didn't touch on, usually when somebody says they're getting audited, one of the things that you really need to worry about, when I see someone get audited, it's not usually like a full audit. Usually they'll say, hey, can you send us the receipts for this? So when she's saying ordinary and necessary, again, we'll use the example. Let's say your business made $50,000 in revenue. It does not look necessary and ordinary if I have $20,000 in meals for my business. So
we gotta eat. That fuels us.
And that's the kind of thing that
to
we're
do
talking
good
about.
business.
That's the kind of thing we're talking about. And so when someone says that percentage of my revenue was used for meals.
So is there a formula that we could consider?
Well, usually like I tell people, a lot of it depends on what type of business you have. So a great example of that would be if I'm a real estate agent, I'm expected to have like huge amount of mileage compared to other people, as well as marketing and meals. Because if I'm doing those type of things, I'm meeting with clients, I'm having to drive all over the place, and I'm having to do all this marketing for my business. So those things are expected for your business.
Okay.
Myself, I really don't write off mileage because my office is right there.
I don't write off.
So I don't write off mileage. You don't see mileage on my thing. I really don't do a whole lot of meals either because I really don't go to lunch with clients. So
you should
so
take me.
So believe it or not, the huge amount of my expenses is you.
Marketing. Yeah.
Is marketing. That's a big part of my expenses.
And a big part of your success.
Exactly.
Let's make sure we say that
Yes.
part.
So,
Right.
But if I was to get audited for that, we could just show them all the receipts of us paying your company.
So let's talk about receipts for a second, because
I'm glad you mentioned that because I was going to say that too. With that, make sure, I don't know if you tell your clients, put why. So if they're putting in a Fleming's receipt, right? So I have the date, I have the time. Who did you meet with? How was this in conjunction with your business? What did y'all discuss? If it's not on your Outlook calendar, you have to kind of have like a tracking date, time, why it happened, all of that good stuff.
Correct.
So I'm terrible at the receipt process. I have 1,000 pieces of paper that were once receipts, but they have faded and disintegrated, and I didn't do a good job of. So then I got the app. Oh, take a picture.
Yeah.
I wasn't consistent, but I'm trying to get my life together. See, you got to confess and then forsake your issues in life. So what's the way? What's the way? Just biblical a little bit. Yeah, I get you. What's the best way to really manage these receipts and make sure that you give your bookkeeper the best chance of success?
That would be great, is taking a picture. Have some type of system, even if it's monthly. If you just dedicate an hour of your time every week or even every month, but do it weekly or monthly. Have a check-in on your calendar to do all the accounting. So take all those receipts before they disintegrate, the ink falls off. I forget what kind of paper they have, but yeah, it definitely fades for sure. But at least if you send it the day of to your accountant, you have a date timestamp. You can immediately remember what that meeting was about, and then you can discuss like, oh yeah, it was a client meeting. They're a potential client. We talked about their contract. We talked about their social media marketing and what needs to be done going forward and how much that's going to be.
And that's definitely a good reason to be meeting at least monthly or quarterly. One of the biggest things I usually tell most of my clients, try not to use cash for anything.
Oh, yes.
Because your bank statements are going to show all of your debit payments or even your credit card. So you'll at least be able to go back there. So when I do a lot of bookkeeping, the bookkeeping I do, it's not so much the receipts, it's you're sending me your statements.
So is that sufficient?
I've gone through audits where all they wanted to see was that. But again, don't take that verbatim, because I've actually had other people say, nope, they went into an audit and they wanted to see receipts. And so I usually tell, I don't need you to send me your receipts if you send me your bank statements. But I say, yeah, if you can keep your receipts, try to keep them in a bag and all that, just in case something happens. But the audits I've been through, they just wanted to see the bank statements. The other bad part, I don't mean to cut you off, is one of the big things I have to deal with, and Amy's probably a little more thorough the way she's talking, because of the way it is today, no one uses cash and hardly anyone uses debit cards. Everybody either Venmos or Cash Apps or Zells people. And so I'll get a lot of bank statements that say Venmo.
With no details.
Cash, no details. So if we're at the end of the year and you bring me your bank statements and I'm having to put all your stuff together at the last minute, all I can do is put everything in one pile and say, this is what you Cash App to everybody. What was all this Cash App stuff for? And usually they don't know. A lot of times with a lot of business owners, especially if they have 1099 people, so a lot of my clients, they're like Cash App and or Venmo and all the people who they're paying. So they're usually good with that. But a lot of other times, there's other stuff that they're Cash App and Venmo, and they have no clue
so
what they used it for.
A 1099 is for your contractors. They're not employees. So just to keep that clear.
Yep.
That makes me think of, what was it? When COVID hit. Can we say that now? Is that when COVID hit? We were getting the stimulus and all of that, and people were, what was it, where if you had so many employees, then you could get this.
Oh, the PPP and the IDL.
Yeah, the PPP and the IDL. So you had 1099, but the requirement was you had to have employees.
Yep.
So that then, I saw a lot of people doing what they were doing, same thing for the tax, where they're filling out your paperwork saying you have employees, but really you don't.
You really don't.
That's
Or they were
tax
creating businesses and saying that their businesses made a certain amount of money to hit the threshold to get up to the $20,000 for the PPP, even though you didn't have a business.
Well, why'd you sigh like that?
Because we've seen that
had conversations about it.
I've actually had clients come in.
This is real? I thought this was only on TV.
No, this is real.
No, people want money, and the thing is that especially minorities, we love that fast money. We have to feel more comfortable paying taxes. We have to feel more comfortable with keeping cash in our bank accounts. It's okay.
Not in the mattress?
No, to make it go to zero. You would be so surprised how many tenured businesses they want their bank account to go to zero. They're just not they don't feel comfortable keeping money in their bank account.
I mean, historically, we have some reasons why. I was reading The Color of Money, and it was talking about black banking and the history that America has in that field where, you know, people put money into these savings banks, and then the savings bank went under, and their money's gone now.
Yeah.
So, you know, we pass down trauma, and I think, education's cool, but where's the trust factor? How do we rebuild the trust?
Yeah. And that's what I always say, I'm selling trust. Because you are trusting me with your money. You are trusting me that I'm going to advise you on how to grow your business, on where to put things. And I think that's where social media, I don't do a lot of social media because I'm just an introvert. I'm an accountant. And so, but when you get to know me, when you become my client, I am rooting for your best interest. I am rooting for you to pay franchise tax, the $1.23 million. You know, that's the threshold. We've got to feel more comfortable paying taxes. It's just not about avoiding taxes. And the other thing too is that a lot of people thought, you know, the bigger my refund is, or how many kids I have, or like all this stuff. I'm like, God, we got to get out of that mindset.
Backwards.
Yeah, it's a backwards mindset. But let's move forward. That 2020 mindset is not our 2024 mindset.
Correct.
Absolutely. And, you know, I look at it like this. Paying taxes is a sign of success. I'm not saying that you should just want to give all your money away that you just made, but to have to pay some taxes and for your taxes to go up means you made more money.
Oh, so great.
It's crazy, like some of the stuff that we share between each other. When you see people who actually make money, what do they talk about? You know, I have to leave money away for taxes and stuff like that. And then you have all these experts who are on here who are saying, well, he has the wrong CPA. He's talking to the wrong person because if you own a business, you shouldn't be paying any taxes at all. And you watch those type of things and you see people going to jail. And